Good morning, StockTwits Nation. It is Tuesday, March 18th, here with Shay Boloor. As always, Shay, how you doing over there?
Doing great, doing great. I'm excited for GTC. It's a big Jensen keynote speech in 4 hours, so
Four
looking forward to it.
hours. Do you
Yeah.
have any predictions for what he's going to cover?
Robotics, 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 robotics.
All
I think it's
right.
gonna be very heavy on that. That's the next derivative of AI, especially for Nvidia, and I think it's gonna be just touching on that again.
Yeah, I feel like he's in a weird spot because he needs to hype people up and inject some energy into the stock, but he can't oversell. So it's a little bit of
Yeah.
a little hype and a little bit of managing expectations, it seems.
Yeah, I mean, I also think there's a narrative right now. It's having there's an AI trade narrative that it's been running hot for years. Has the glory days officially behind them? Like, is it plateauing? CapEx spend? Are data centers going to continue being the epicenter for all this? The whole AI theme. Like, I think b- everyone's assuming that CapEx plateaued from big tech. We're in the middle of the S curve, but what if we're not? Like, what if the party's going to continue and everyone's just speaking in something into existence that isn't really there? So that's part
Mm-hmm.
one. Part two is also like I think we need more Blackwell commentary on how that's going, and it's all about margins. I think Blackwell is supposed to take the margins. Margins went from 79% to 70% or 71%, and it's going to return back towards 75+% in the second half of this year. Any kind of update on that would be great, and I think the next innovation window after Blackwell is Rubin. So if they're going to talk up Rubin for 2026, that's going to be interesting as well.
Remind us what Reuben is, real quick, for people who aren't as in the trenches as you, Shy.
No, it's truly just the next derivative of the latest and hottest chip. It's just the faster, more efficient. Like it's just this is the biggest issue with like AMD, where as soon as AMD thinks they have a seat at the table for the GPU hardware space, innovation window for Nvidia is going from 18 months to 12 months. Now it's like 10 months. So
Yeah.
I think that they're innovating so rapidly for the latest and hottest chip that AMD just cannot keep up. And that is always look at the stock price for AMD versus Nvidia the past 2 years, 3 years. Like that's why, not just because they lack an ecosystem that Nvidia has. It's clearly that as well. It's just like even the hardware component of it, they just can't keep up.
Yeah, I mean, so you're someone who follows this very closely. For people watching at home who are also watching this, do you trade based on anything that's said or referenced today, or is this more of a general update that informs a longer term strategy?
I mean, I think margins is the one thing I look at because that has been the headwind for Nvidia since their last earnings report. I again, it's very subjective. A lot of people can read into their print and see, oh, it's half glass full, half glass empty. Like really, it's very subjective. But for me, I think the soft was due to the margins kind of being lighter than expected for the first time in a while. And I know the commentary on the conference call said it's going to return back to towards 75+%. I don't know if the market believed that. That's the issue.
Yeah.
So I think that's going to be somewhat of a weight into what I am looking at. And also, Jensen mentioned about the ChatGPT moment for robotics at the last event. I think it was a CES event. So he is. I just wanted, like, as a Tesla shareholder, who is, I think humanoids is going to be a big component of my Tesla's thesis. Like, I want to hear more about what he's seeing in that robotics theme and if it's going to continue. Maybe it's going to have some kind of revamp on the capex spend as well. If people have to spend on robotics, if that's in the near term, like that's not being valued. And also, the
Yeah.
quantum day I think is the end of this week, so maybe he'll sneak in some quantum comments as an
Yeah.
Ion Q shareholder.
I mean, you and Kim K, bullish on the robotics. I don't know if you saw, she did a photo shoot with one of the robots. Slightly disturbing.
Oh yeah,
Uh, did you catch that?
yeah. I mean, I think Elon's just trying to normalize robotics
Yeah.
into everyday life, but he's doing it in.
Yeah.
I don't love the brute force marketing tactic, which they're trying to
Yeah.
get at. It makes me feel like, oh, don't focus on this like little messy stuff over here. Look at the shiny new product. I don't
Yeah.
like that at all. See, I'm seeing through it, so it is what
Yeah.
it is.
Yeah, it is interesting. Historically, Tesla was known for being very like anti-marketing, but eventually, you got to send a message about these products, and to your point, normalize them to some degree. I don't know if normalization comes with pairing it with literally the most famous person in the world, but they're a great picture. She looks beautiful. Um, we see some people here in the chat. We're going to run down some of the headlines here today, but definitely drop a line if there's any tickers or topics you want us to touch on. Zooming out a bit, let's check in on how things ended yesterday. We ended up in the green. The QQQ is up 0.65%, the SPY up 0.77%, and the Dow Jones up 0.85%. So some good momentum there. Let's head over to StockTwits and see what some of those trending topics were, and what the community was talking about. I think a big one was just generally markets shaking off jitters. So Secretary Besant's comments over the weekend, Baidu's AI rollout, didn't really move the needle for investors. Shay, what do you think kept us in a decent spot yesterday overall?
I think yesterday, I mean, I'm hoping I'm wrong. I just think yesterday was a continuance of what happened on Friday, which was oversold nature. To like the market was just oversold. It happened too quickly, and I think that it was bound for some kind of dead cat bounce. I think my perspective on the market has not changed. I think like this isn't a time to throw just caution aside, and just because stocks stopped falling, they went up back to back days. Like the economy is clearly slowing, bond yields remain elevated, and the Fed is signaling that rates will going to stay higher for longer, and the economy is going through a detox. It's going to be a tough couple quarters, to be honest, in my opinion. So like, although the market's treating the last 2 days as if all those issues, all those macro issues behind us, it's really not. And I think it's kind of it, technically speaking, the 200-day moving average for SPY is at 569, and we literally was got to that level and just pulled back before end of close yesterday. I think this is like telling me a bit that we were oversold, we bounced, but we're nowhere in the clear. And seeing this pre-market action this morning, like SPY is at 565, so it looks like we are getting rejected at that very key level. And can Nvidia save the day today? Maybe, but like the Max 7 names have been like lagging so hard, dragging down the indices, that I just don't know what Nvidia can say to drive those names up. And those are the liquid stocks in the market. So if those liquid stocks aren't being the market leaders, although the breadth is widening, which is great to see, there isn't that much volume that's causing this like bounce. And I just call BS a bit until we clear this 200-day moving average. And if we do, great. We survived this correction. But I remember 2022. I will not experience another 2022, specifically as a portfolio manager. And I'm going to be defensive.
You're not going back. Yeah, I think I saw a poll this morning among analysts. No surprise, 100% think that the rates are going to hold coming out of this FOMC, but there was a slight uptick in recession odds. I think it was at about 27, and now it's at 32, something like that. But yeah, we'll see. We'll see what what kind of rabbit he can pull out of his hat. Maybe he's got a new tattoo. Who knows? On the sector watch, we saw real estate have some strength yesterday. Consumer discretionary stayed in the green, but it was pretty low volume. People are kind of still shaky there. Sounds like you're not trusting this rally, Shy. Do you have any thoughts on real estate in particular? We have some real estate earnings coming up this week, Better. And I know you have some thoughts on Better Home and Finance. I always want to say Better Home and Gardens when I see that. Better Home and Finance. Real estate in particular, do you have any takes on that one? Because that's one I think that's been in the headlines a lot, but I think investors are trying to make sense of it.
All I can say on real estate is, as someone a millennial, look house shopping in LA, it's frustrating to see the supply out there. Also, I think what's under discussed is Warren Buffett sold his brokerage business, his real estate business, just like I
Did
think
that
it's like
go through, or are they still
a couple
talking?
weeks ago.
Okay.
Might have gone. I don't know if I saw the news headline. So
Yeah. Compass,
I
right?
yeah, Compass exactly.
Yeah.
That's worrisome, guys. I think there's a world where the real estate market can really go underwater if the consumer recession is very real and it lasts very long.
Yeah. I think it's like we were yesterday. If you guys didn't watch yesterday, we got into a very philosophical conversation with StockTwits CEO Howard Lindzen talking about just real estate and how millennials and Gen Z are kind of getting hosed on that front. And a lot of people are locked in, they're not moving, there's not a lot of activity going on. So I think it's usually, if Warren Buffett wants out, it's probably not a great sign, but something to watch. Let's shift over to corporate moves and earnings. Pepsi making a prebiotic play. They acquired Poppy for $1.95 billion. Shy, is this a game changer in the gut health industry, or another just a premium beverage fad that we've seen before with some of these other companies getting sold to larger corporations?
I mean, you're clearly seeing what the consumer not discretionary, but it's more just like the alternative energy drink or alternative drink space. The David versus Goliath, like you can't compete with the Goliaths in this space. Like Pepsi and Coca-Cola will just continue acquiring the latest and greatest thing, putting
Yep.
it under their umbrella. And guess what? Consumers don't care who the parent company is. I don't look at Poppy and like, oh man, there's Pepsi logo on the bottom right now. Like I'm not touching it. No, that's not the case. And you've seen Celsius acquire Alani just a couple weeks ago as well. Like Celsius, I think that's what indicates to me like Celsius's growth days are behind them. It is. They're
Mhm.
entering a new phase of their life cycle as like the mature acquiring the latest and greatest. Their own product might have hit that plateau on domestic like market share, and they're just gonna acquire the way using the Coca-Cola Pepsi strategy. I
Yeah.
don't love it because they're only $7 billion market cap. This else is already doing that, where Coca-Cola and Pepsi and even Monster have been doing it for decades and much larger. But this is the name of the game for the space, and I think that there's another name and that's a Poppy competitor competing product. Um, I forgot who
Ollie?
it is. Oh, Olipop.
Yeah.
They're gonna get acquired. That's just how
Who
it
do you
is.
think's a good target for them?
Coca-Cola. It's
Oh,
just gonna be, uh, yeah,
okay.
probably Coca-Cola. Yeah.
Yeah. I mean, I was just thinking like Keurig Dr. Pepper, haven't heard much from them. Maybe they'll,
Oh yeah.
what are they going to pick up? What's going to be left?
That's a
Um,
very good point.
it is interesting. The other day I opened my fridge and I was like, whoa, at what point did like a third of my grocery bill go to carbonated water of different?
Oh
Like
my
I
God, mine's
had
so bad.
Pellegrino, I had Celsius. I don't know when this happened, but it's insane. Like it's absolutely insane how many variants of water I spend money on in different cans. And it will be like, is this the new normal? I don't know when that shift happened, you know? Last couple of years, maybe.
I
Uh,
mean, I just think consumers are. I honestly think it's COVID. Like you mentioned, like
yeah.
people are just wanting. It's not a sin because there's healthy alternatives, but like they're just looking for any kind of like fleeing relief. Let's just call it that. And my fridge is filled with kombucha, like poppy drinks, Celsius. Like I love that carb and sparkling water. Like I love the having a meal with a sparkling some kind of carbonation is a game changer for me. And I think there is some level of psychological addiction to it, which
Yeah.
I think I might have.
It is a sensorial experience with the
Yeah.
sparkling. It's got a little something extra. Well, shout out to Poppy's founder. I think woman founder. She's got 3 kids, 3 trust funds
Oh,
right
nice.
there, born overnight. Way to go. Way to get your bag. Let's talk about Klarna now. Klarna's IPO valued at $15 billion. There's some drama going down in buy now pay later. Yesterday, Klarna announcing they swooped in on Affirm's Walmart partnership and took that over. Affirm stock took a hit. StockTwits polls showing mixed reactions. I know, Shay, you got some thoughts on Affirm, BNPL. What do you make of all this?
I've been an avid communicator that buy now pay later is an ultimate commodity of a product. There's no network effect that you can have in this space that's similar to Visa, MasterCard, even our Robinhood, which has an ecosystem now or network effect. It's just based on partnerships. What happened yesterday? The crown jewel partnership that our firm has been touting for months, rug pulled them at a flip of a switch. It didn't take much for them to do so. They just went to a competing product.
Mhm.
That's a symbolism of how much of a commodity this product is. Where CrowdStrike effed up so bad last summer, 97% retention rate, minimal churn. Why? It takes years to migrate your data out of their ecosystem. That's a network effect. Affirm, I'm just gonna go to some competing product. It'll take me maybe a couple weeks to migrate out of it. It's very seamless.
Yeah.
That's worrisome, and that's something you have to be prepared for if you're an Affirm investor. And you also that's part A, lack of a moat. Part B is let's just say this recession is really real, and consumers are actually the straws breaking the camel's back on this year for the economy going through a detox, but it's going to come at the expense of the consumers, and they're going to break. What's the first thing first domino to fall? Buy now, pay later loans, because they don't weaponize the interest rates, but they do take advantage of the consumers who just don't have the luxury of having a lot of cash, having a fixed lower interest rate. Like it's somewhat variable and somewhat significantly up there where I don't know. It's if they can't afford to pay in cash, then they're just gonna kick the can down the road and just do buy now pay later.
Mm-hmm.
It's gonna stack. It's gonna add up a bit, and they're gonna be screwed a little. So like,
Yeah.
I would not be in the space. I'm
Yeah.
very bearish.
So I sat down with Firm CFO Rob O'Hare, and that interview actually drops right after this show at 10 a.m. It was a really interesting conversation. And one thing that came up in that interview was that in the U.S. e-commerce, 7.5% is now facilitated via BNPL. And what's interesting about Affirm vis-a-vis others is they see 50% of that by revenue. So Affirm's first partnership was or one of the first big ones was with Peloton in the pandemic. So they tend to skew higher ticket items. I kind of dug into that. I was like, why? We were talking about this before, Shay. Like, what's different between these? There's typically in BNPL, there's something called a pay in four, where it's just four installments of the loan payback, which works for like a sweater or something lower ticket. Bigger ticket items, you might want to do that over a year, 18 months. And so Affirm's trying to kind of create this model where you can turn any big purchase into almost a subscription, which I think is sort of the way things are going. So it was interesting to hear that nuance of they are almost like the Walmart thing is like a down market thing for them, which they definitely want to be across all spending levels. But that's almost an easier get for Klarna versus Affirm, because Affirm is going after those bigger ticket things. You know, even in a recession, if you spill chocolate milk, I don't know who drinks chocolate milk, on your sofa and you need a new one, you might want to BNPL that instead of dropping, $1,000 on a sofa. But they got ahead of it, but not a lot of people noticed. In December, they dropped an 8K. They were basically like, they must have known this was coming. And they said the Walmart transaction was less than 5% of their gross merchandising volume. So I think it's so nuanced and it's interesting, but I do think the more players in the space, to your point, they're going to be fighting for these partnerships, and I think the partners will win. This is I don't know if you guys follow Jason. He's a really really sharp guy in fintech, but he's kind of calling BS, and he's taking the other side, saying Klarna kind of had a PR play there, where some of the nuances of this weren't really reflected in the articles yesterday. So this now becomes a corporate communications battle that I'm sure will continue to play out. Do you think this is kind of like a Klarna PR play, Shy,
Totally.
or are you still?
I mean,
yeah,
the IPOs this week. I think
Yeah.
this is purely
yeah,
pump up the demand for their IPO, make sure it doesn't falter.
Yep.
I still just think it's symbolism of like how easy how seamless it is to switch between products, and like, what's it to say that all these other big ecosystems just don't create their own products down the line? Like they
Yeah.
could. Like maybe right now there's some pilot mode of like, can buy now pay later survive? And if after 5, 10 years, if it can, okay, it passed the test. We'll create our own, and now what?
Yeah.
It's just like it's weird. I will say like I tried to buy now pay later. I think it was last Christmas for a TV. And then after like 1 month of it, I was like, I can't. Even though it's like interest free, I just don't like the dollar amount on my statement
Yeah.
and every month, so I just paid it off. Like I
Yeah.
think I'm wondering how many people are like that, where just like you're kicking the can down the road, like, but like you hate seeing the evidence of your massive ticket that you bought, so you're just gonna pay it off.
Yeah, it is true. You forget about it. I did BNPL. I took a trip with my sister. It was like, yeah, she's fancy. But like every month I'm like, oh, damn, forgot about that. Like that was a fun trip, but it's now 6 months later and I'm still taking the hit from it.
Mhm.
Let's turn over to Robinhood, sticking in fintech land. They finally got the prediction betting markets product out yesterday. Stock was up, I think 7% and market close. People loved it. Um, what do you think of this, Shy? We talked a little bit about this with Howard. You pro betting next to investing or not?
I think I think Robinhood is turning into a multimedia company slash like just financial ecosystem, but I view them a lot as a multimedia company now because they market so freaking well, like incredible. And they started as a financial brokerage. They turn into a financial ecosystem. I think now they're transforming to a multimedia company where they're just going to be taking advantage of the TAM is eyeballs now. If there's a way to make any kind of juice in any market, you go on their platform. I think that's what they're trying to go towards, and degeneracy, like when we were talking to Howard yesterday, it's just like that is the future. Like unfortunately, we're just trending towards that direction where you can bet money on anything eventually. And where do you want to do that? Maybe one platform can be the central location for that, and that's could be Robinhood. And these kind of prediction markets, like it's a massive TAM expansion because they're eating into DraftKings market share now. And this is another reason why I've been bearish on DraftKings is what's their moat? They don't have a moat. Like there's no competitive advantage. Like it's a commodity. It's weaponizing degeneracy, but guess what? Degenerates have no loyalty towards products. They don't. It's about the best bang for the buck. And
True.
everyone, all the thesis I read about DraftKings, like, oh, they have their market share leader, like they're always gonna be market share leader, even once it becomes federally legal, it's gonna just take off. No, it's the catch 22 effect. If they once it becomes federally legal, do you know what's going to happen? Netflix, Amazon, Apple, they're all going to have a DraftKings competing product because you're seeing the pre-read on it. They're all getting into live sports already. Do you not
Yeah.
think it's going to be synergy, the easy synergy of just having live sports betting as well involved? They're just waiting for the federal for it to be federally legal. And
Yeah.
when that happens, they're going to be the pricing power, the margins for DraftKings, because now they have to incentivize their customers to stay in by giving them free credits or whatever it might
Yeah.
be. It's a losing game for them, and I think Robinhood is now going to be competing against DraftKings, and DraftKings doesn't have the full financial ecosystem that Robinhood has
Yeah.
at all. So it's just it's a
Yeah,
crazy
I
game.
think Robinhood, like originally I was like, oh, they want to be like an investing finance super app, but really it's kind of just like transactions. And like
Hmm.
one transaction over here, gonna bet on St. John's. Okay, say I win the bet, I might push that over into my Roth. Like that's just the behavior today. But we've seen this. I think we have a quick chart we want to pull up. And Axios had a great chart in August that like blazoned in my brain, but it was showing flows into investment apps over time as sports betting became legalized. And they fell off a cliff because it's
Mm.
like people got some extra money. You know, what are they going to do? They're going to bet on a sport. They're going to bet on Tesla. Like it's all betting at the end of the day. There's different types of betting. But I think to your point, Robinhood has the ecosystem. They're fully like entrenched. I don't know. I'm curious. Robinhood must have more users than DraftKings, but I could be wrong. But they don't have to acquire new sports bettors. They have them. So it's more of a cross sell within the platform. But I thought this was super fascinating when I saw this because it is people are looking at money all the same and they're making these decisions on the fly. And I think your point about degenerates not being loyal is so good. Like it's so true. Like this is a space where like no one's gonna be like, well, I love DraftKings UX. Like nobody cares. They're gonna take the credit. They're gonna go to what's easy. So
Yeah, it's like I'm 3 a.m. I'm betting money on the Indian women's basketball matchup, but I have morals.
right.
It's just like it just doesn't. That's not
Amazing.
correlated.
Let's flip into the StockTwits platform and see what y'all are talking about. Also, we see you guys in the chat. Let us know if you're going to be using the Robinhood prediction market feature and also what you'll be betting on. What do we got going here? Okay, Tesla, no surprise there. Do you think? Oh, Shay, did you follow this news from BYD this morning? They basically said they have a new charger that can charge for 250 miles in 5 minutes. So I don't know if that's reflected here, but that seemed like a big deal.
So this could just be me, but I don't trust anything the East says about anything they do. I just think it's all BS or inflated. There's no fact checking. So grain of salt, but I do think what's happening on Tesla specifically is just it's just unfortunate. I don't know. I was talking to a buddy yesterday, and it was like, what Meta went through in 2023 it feels like what's happening with Tesla a bit. I know Meta's a completely different fundamental story, but is it really? Because when you think about 2023 Meta, everyone hated Zuck. Everyone. Nobody trusted Zuck, and they hated the big brother of all the Meta products that Zuck clearly was just like finessing around publicly, but really he was just like monitoring everyone. Everyone hated Zuck, and their margins were just heavily invested in Reality Labs, like these money losing arms underneath their Meta umbrella that shareholders were frustrated, consumers didn't like it. Like it was a bad mix. Then all of a sudden Zuck he turned the swag on from whatever PR rep told him to, and it worked. And now a lot of people are liking him 2 years later. And he also he became financially disciplined, more efficient, and focused on margin expansion, which is every shareholder's dream. And now shareholders are happy. Consumers viewed him in a different light. And now Meta is a completely different company than it was 2 years ago. I know that Tesla or Musk is putting himself in such a hole with half of the world, and the other half, like maybe that makes up for the far left hating him, maybe the far right loving him. It's a net positive, but I just think that his polarizing public persona has clearly put a lot of pressure on the stock, and it's affecting a lot of the delivery numbers, especially overseas. Because once you cross the Atlantic, it really is highly liberal because that's the way it is. And people in Europe, especially like in Germany, like you're seeing these numbers, like the delivery numbers are so bad year over year.
Down 90% in Germany. I think you nailed it. I think we're very US centric and we're like, oh, well, like it's 50-50 about in the US and the Republicans, but like you go to Europe and like left in Europe is like center right here. Wait, did I do that right?
No, other way around.
Other way around. Yeah. So like it's like the global impact. Yikes. I think that's probably what's scaring him a bit.
But also like it's a story stock. Like if you believe in the story, it's going to be a $10 trillion company. It might 10x. That's the thing. It might 10x.
Yeah.
And this is one of Elon's biggest bets, in my eyes, biggest bets he's made in his career. And he's made a lot of big ones. He is sacrificing his EV business to fulfill his autonomy vision. Make no mistake, that's what's happening right now. So if it succeeds, 10x. If it doesn't, this stock will get re-rated aggressively as an OEM. I don't know what happens to Elon running Tesla if he can't solve autonomy at scale, or even Optimus Robotics, if those two are fails, I'm out because I'm invested in Tesla as an AI and robotics play. But I believe in Elon. He's hitting 100%. But could this be the one he misses? I don't know. I don't think so. Especially with him being the first buddy, I think something is going to come to light that we haven't been aware of because nothing really hasn't. Besides that cheerleading show that Trump did just last week for Tesla, nothing substantial has happened yet. That
Oh my
will
God, I
change.
just caught First Buddy. That's good.
Yeah.
First Buddy TM. His new haircut also. Yeah, I don't. So yeah, maybe like entrepreneurially batting 1,000 haircuts. There's the opening bell. Happy trading day, everybody. Let's see how we're doing today. Let's keep flipping through the what's trending, and then we'll check on sort of where we're at the open. I think other than Tesla, there was also Amazon in there. I mean, the usual suspects. Going over the chat and seeing if anyone has any requests over there. Shy, at the opening, are you seeing anything here that's interesting to you, or are we in wait and see mode?
No, clear selling. We're getting rejected on that 200-day moving average. Looks like it today. So I'm seeing risk on being sold off. It's very risk off so far. Amazon is just like lagging a bit. I will say for Amazon, this one, the 190 level is a massive one for them. Like it's pretty huge. So it's like clear support level. See what happens there today. Yeah, my whole portfolio, I have 20 names. They're all red. So it is one of those days. What else? I mean, Tesla continues their selling. Jeez.
So are you buying more Tesla right now or no?
I did buy more last week, mainly because their 200 weekly EMA is at 230. So if you look at the chart as well, like it's kind of sitting on there. It continues sitting on there. That might be a support level, but I don't know. I think you're clearly seeing the deliveries be awful. I think the next earnings report is going to be bad. Headline numbers bad. And like it's a story stock, so you're not going to see anything in the numbers to make it a catalyst for the stock to turn around. And that is somewhat of an issue for next couple months when you know there's going to be an awful earnings report. What's going to be next catalyst? I don't know. Yeah. And this looks, it feels like it could hit 180, to be honest. Like it looks like 180 to 185 might be the next level, and I'm probably going to add there, but it's a speculative
when was
position.
the last time it was at like a 180?
It's been, I mean, 180 was just last summer.
Okay.
But it was also at 180 5 years ago. It's basing.
Wow.
It's been in a 5-year base. So
okay. Yeah.
I think that's why it's a very important level, the 180, because that has been a very strong volume shelf throughout the last 5 years. I just think a lot of people front ran something that's going to happen in a Trump-led presidency after election. It's 2x in a matter of a couple of months. Now you're realizing it won't be as quickly as you anticipated. EV business is getting killed because of Trump's political presence or whatever he's doing in Doge. It's a very hated stock. It's a polarizing stock because people always say like, oh, fundamentally it's super expensive. They're idiots. It's a cyclical business. Like when it looks expensive is typically when you want to buy, because just look at it historically. It's when it looks cheap, that's when you don't buy, because that's how cyclicality works in this industry, like for semiconductors and EVs. So I think that's an annoying, and also they're using EV metrics. I could care less. I'm all about autonomy. And it's a risk. It's a speculative position. It's tech selling off big time. So this looks like it's going to, the last 2 days was a fake.
Yeah.
As of right now.
Let's pull up Alphabet because in M&A news, they're going to acquire cloud security startup Wiz for $32 billion. Let's see if that's having an impact immediately. Looks like it. Shy, do you have any thoughts on this? I don't know anything about Wiz, so I'm curious if what sort of muscle they're building up with this deal.
First off, they're for sure gonna have to use the slogan "Gee whiz." I think
Yes.
that's a great post acquisition one, but this is a massive. This is a big. I don't think it's gonna go through, but if it does, let's just play
Okay.
the hypothetical world that it does. This is massive. It's a very big acquisition, and I think it's huge for Google itself, but it's also massive for the crowd security space in general, because this $32 billion price tag, it's paying like 60 times ARR.
Yeah. All
It's a
cash
massive
too.
multiple, all cash. It's a
Yeah.
huge multiple. And I did a post yesterday on it. If you want to bring it up, Keith, it was regarding, it was using the Google and Wiz bid multiple. CrowdStrike's cloud security, identity, and next gen SIEM segments, those three growth modules for them are growing over 50% year over year and now ended at a 1.3 billion ARR. If you want to apply that 60 times multiple for those three segments alone, that puts CrowdStrike's could sell that for $78 billion alone by itself, those three modules by itself. So that everyone knows CrowdStrike as this endpoint security company, the best of breed. So using just those three modules as the $78 billion, the CrowdStrike valuation right now sits at $82 billion. So you're only buying, like, endpoint security is only $4 billion. BS. Absolutely no way. I think this is just showing that cloud security is such an insane premium multiple, like right there, is such a crazy premium multiple right now that Google's willing to pay 30 times EV to sales, 60 times ARR to acquire Wiz when CrowdStrike is the best of breed cybersecurity product out there. And those three modules I called out growing over 50%, and they're worth $78 billion alone. That's how crazy of a, a like presence that CrowdStrike has in cybersecurity that has a massive runway. And the reason Google's willing to pay up because cybersecurity is going to be massive in the agentic AI world we're about to enter, where data, data, data. What do you have to do with it? You got to protect it from these AI agents. There's like that's why, like, right now CrowdStrike looks expensive compared to traditional software metrics. But now we have a clear benchmark valuation that someone will pay for cloud security. And I know that Wiz has different growth metrics as CrowdStrike, but like let's just say I feel like those three modules growing over 50%, it's got to be in the same ballpark of how much Wiz is growing. And
Yeah.
I gotta say, CrowdStrike's looking pretty freaking cheap, and I would not be surprised. They're green. They're the only green stock. See, I knew it. That's it's
How
very
good does that
bullish.
feel, Shy?
I knew it. It's very
Like,
bullish for that name. It really is.
yeah, I had so reading it, it looks like Wiz was either going to IPO or they wanted $1 billion in annual recurring revenue, and or sorry, yeah, billion, yeah. Um, so deciding to sell now, do you make anything of that? Like, or is it all just like it's all bullish for CrowdStrike to you?
So Sentinel-1 has a CrowdStrike issue where they have a good product. It's not great, but it's pretty good. But you're seeing their stock price. It's just like it's in the gutter, and they're just not growing as much as CrowdStrike. Their margins are not even close. It's because they have a CrowdStrike problem. Like there's such a better product out there that CTOs like they don't want to go through multiple security vendors every single month. Like even if SentinelOne has one specific product that's better than CrowdStrike, they're going to adopt CrowdStrike's ecosystem because let's just have it all in one place and we just deal with one vendor, CrowdStrike,
Yeah.
every single month. Much easier, much more efficient. So SentinelOne is a CrowdStrike problem. Wiz falls in the same thing that they have a CrowdStrike problem. And the reason I think they initially rejected Google's offer last year is because it happened around the same time as the outage. They saw a
Mm.
door, like, the opportunity finally opened for them. Like, oh, we've had this CrowdStrike problem. They just effed up bad in front of the whole world's eyes. Like it could not get more visible. They're F up. This might be our opportunity. Like I just mentioned, 97% retention rate on CrowdStrike's customers post outage, and their growth. It's they're offering free credits and they're incentivizing a lot of customers because of their F up. So it's their margins looking a little lighter, but it's really they have a Rule of 40 score of 50 still. They're just doing just fine. So
Yeah.
Wiz maybe saw like shoot, like even with that outage, like people will not be leaving that ecosystem, even if it's pricey. So let's just take this offer at a ridiculous premium valuation, and we don't want to go public anytime soon because why should we? We're getting
Right.
an incredible
Yeah.
premium valuation in the private markets, and with IPOs are on pause now because of this tariff war, and I think maybe a lot of they have a small team, and I think a lot of their employees maybe were hoping for some kind of IPO last year, this year that will not be happening. So like, I think they're also maybe thinking about their employees, early employees, and also themselves. Like they want to cash
Yeah.
out. So
Yeah. Fine consolation prize for them. I saw someone in the chat bring up precious metals, and then I flipped over to the chart for gold, and it's still ticking up. It's up 40% in the last year. Like, does every day? I'm curious what you think, Shy. Like every day, gold goes up higher. Is that more worrisome? Of just like is what's going on? Like that, just every day gold goes higher. It seems like okay, people are concerned. They're freaking out a little bit. Like it just keeps climbing up. Is that worrisome over time if it just keeps ticking up like that?
it's not it's not great.
Yeah.
I mean, again, this is coming from someone who's not a commodity player at all. It's a flight to safety. So like, there's the economy's going through a detox. Nobody knows what's going to come out of that detox. Will you have a six pack, or are you going to be hangry and just destroy a bunch of things? Like I don't know. Nobody really knows what's going to come out of the detox, and you're just going to park your cash in a safe commodity, and that's gold. I did think there was a thesis that Bitcoin would be that flight to safety a couple years ago. I just don't think that's the amount of times where we needed a flight to safety. Bitcoin has faded with the market. So I think
Hmm.
you're noticing more that crypto or specifically Bitcoin is actually a risk on barometer. It's not a flight to safety, which is fine.
Yeah.
But I think gold is maintaining their status as the go-to flight to safety. And in a time when there is so much uncertainty and noise, I'm not surprised to see it catch a major bid.
Yeah. I think Bitcoin like could be that structurally could be that, but the people interacting with it they're not interacting with it in that way right now. They're
Hmm.
interacting as a speculative asset. Someone in the chat was talking about like precious metal miners. Is that an area of interest to you if you're not directly in commodities, Shy, or going back to like okay, picks and shovels? Is that the move? I mean, that's betting on this continuing, obviously.
I mean, well, as opposed to just having cash, maybe, but also like, holy, the market's just puking now. I
Let's
don't
pull.
like mine.
Can we pull that up? Let's take a look.
QQQ is almost down 1.7% now.
Okay. Well, it
I
was fun while it lasted
Yeah, Tesla's
yesterday.
down 6%, Palantir's down 6%, Nvidia's down 3%. Yeah, it's a bloodbath. I don't like Bitcoin miners. I don't like crypto miners. I don't like gold miners. Like if you're gonna own something in that space, just own the thing. Own gold. Own Bitcoin. The rest is just getting cute with it. Like, you might get more alpha, but like you're just getting cute with it. And there's a lot more at play, like fundamentally that you have to track. That just like it doesn't. They're all linked to Bitcoin price. They're all linked to gold price at the end of the day. But they might have awful corporate governance and f up. And there's like so many crypto miners out there that Bitcoin was at 120K, but those stocks were down like 40%.
Yeah.
You don't want to be in that position where you're right in your thesis, you played it poorly because of greed. Don't be like that in these commodity spaces. I don't see the add value, but for this, I mean, freaking nailed it. Yes, I wrote it last night. Uh, Update on my market thoughts to my subscribers because I was getting a lot of questions like, because I have an 8% cash position. Like, are you going to be investing in cash? Like, is the worst behind us? And I told them I think Friday and Monday was just signs of a market bottom in near term, but it's not anywhere close to a new narrative. And it's going to provide a false sense of security. And unfortunately, we're seeing that today. And I do think we're going to hit a new low in the market. I don't think we're like done with our market pullback. I really don't. And I think that look using the charts, I called out that the 100-week EMA level for SPY, I think I can see a 510 and 515 as like the bottom of this pullback. And I don't think a lot of people are ready for another 10% correction. That's the issue. They're not. And I'm not a bear, guys. Like I'm not. You guys know I'm as close to a perma bull as possible. You have to be patient in this market. You have to be defensive when we're in stage 4 breakdown the charts. Like as long as we're below the 200-day moving averages, you have to anticipate losing more money. You just do. And have a laundry list. Like I want to add one or two more positions in my portfolio. I have 2 names I want to add. I will be watching it closely during this pullback to add more to those
What are
names.
those names?
I got to keep it behind the paywall, but like those
Okay.
names, I do love those 2 names, and I also might be trimming some positions in order to add to those names. Like
Yeah.
it's
Um,
tricky.
well, yeah, if you're a miner, stay away from Shy. He doesn't want anything to do with you. You keep that away from him. Let's look
Music to
at
my fiance's ears.
oh my if let's look at some of the earnings we have coming up. I know we have I saw this cannabis company that's reporting, I think today, Sundial, and then I was thinking of like, oh yeah, cannabis stocks. How are those guys doing? And started digging into that. Like, we've never talked about that space in particular, Shy, here on the show, at least the two of us. Um, you see companies like Tilray, which was a cannabis company that has like they're rapidly expanding into like beer because they can't predict the regulatory landscape. Um, are you bullish on that area, or is that something you're staying away from as a tech guy?
So I live in Beverly Hills, Hollywood area, very close to Melrose. That's weed is around me everywhere. It's very normalized. I think eventually it will be as normalized as alcohol. It will be. I don't know when. It's just going to be.
Yeah.
But the opportunity cost of holding names in the psych industry is just not worth it to me. I don't feel the urgency of getting involved when. So look at the last 10 years of these, 5 years of these stocks. Like there's been constant head fakes. That, oh, it's happening, it's happening. Some old geezer said no. It's happening,
Yeah.
it's happening. Multiple geezers said no. Like it's just like we're not in the place where I think it's gonna get pushed federally, which is unfortunate because I think it's gonna be really, it's gonna improve a lot of people's lives if I think it became federally legal. And I think it's a great product. It's a bad investment right now.
Yeah.
And I'm willing to miss the first 15 to 20% move if it's actually real. I don't see any signs of it actually being real yet.
Yeah, it seems like a lot of head faking. Although it seems like similar with sports betting, if the government can get a cut of that revenue, why wouldn't they? But
Yeah.
I think there's a lot of moral debate, even though to your point, it's pretty much the same thing as drinking. On the housing market front, we're getting some data later today on building permits, housing starts. Everything we've seen lately, Shy, seems like things are kind of muted. Is that what you're expecting out of this data dump?
Yeah. So I think consumers read headlines and they read so much uncertainty that you don't really want to make any major moves because you just don't know yet. Like people prepare for the worst all the time. That's the psychology of every consumer out there, every investor. Like even like there's fear in the headlines. You don't really want to risk the biscuit. You remember 2008. You don't really want to risk your investments. You remember 2022. Like there's just moments of trauma that stick with you that you think about in your back of your head of when there's uncertainty, it leads to FUD because of your past experiences. I think right now, like tariffs are just like going back and forth, and you hear the terms of, oh, negative GDP growth, unemployment might be ticking back up, Doge is laying off all these customers. I mean, not customers, these workforce that's taking down the Washington D.C. market, and nobody really knows the impact of all these government cuts yet, like for the whole country. They're just gonna be on pause and like wait it out. So
Yeah.
not surprised, but also I think that's symbolic on like Redfin just selling out. Like they sold out. That's, if you guys don't know the CEO of Redfin, like that dude was very warrior like for the whole industry and space. He sold out. I think that's a big tell on, and him and Berkshire or Warren Buffett selling their brokerage business.
Yeah.
You have to read these signs. Like I think there's something coming for the real estate market. That's not gonna be great.
Yeah, that seems to be the vibe. We also have some data coming out of Japan on their interest rate decision. I know the Bank of England, I think, has theirs on Thursday. Do you track any of these global rate decisions, Shy, or are they just kind of part of the normal day to day of how you manage your portfolio?
I can't even keep track of the U.S. one.
Yeah, I
I
know.
can't imagine. Also, I'm not a macro guy though, so I know a lot of people who are, and they trade futures because
Yeah.
you have to be. In order to trade futures, you need to be able to monitor those kind of policy changes over the Atlantic. It's just for me, I don't really use it much. I probably
Yeah.
should, but I just don't.
Yeah, they the other thing I saw this morning was some headlines out of World Liberty Financial, which is the Trump adjacent affiliated crypto project. They raised another 550 million on their token. People are buying into the token, but the actual business infrastructure company doesn't really exist in terms of they don't have products yet. Um, but that's actually raising some more questions around the ethics of all of that, given a lot of that money is funneled back into the administration. But that's an interesting one to watch as well. It was fascinating watching CNBC this morning, and one of the anchors was like, "Yeah, what is this? I don't really. What's a token? What does this mean?" I think for the average person, you're like, "Yeah, whatever." But these are very like intertangled things that are something to watch. And I think the crypto space in general right now is in a weird period. I have a friend who's deep in it, and she's like, "Oh, crypto's like dead right now." Meaning it's not dead, but um, a lot of people are in wait and see because you have the people who came in chasing the more speculative stuff. You have
Hmm.
the purists who don't want that. I think Solana. I don't know if you saw the Solana ad that came out yesterday. Everyone hated it. It was kind of political, and crypto is like, wait, we're supposed to be apolitical. So I think there's a weird crypto thing happening too. I need to get like deeper into crypto Twitter because I like watching fights from afar. But I think that's the reckoning with them now is like they were supposed to be this sort of apolitical libertarian thing, and now they're being very closely tied to specific ideologies. Um, so that's an interesting one as well. I don't know if you caught that headline.
I didn't, but I'm not surprised. Like something in early industries, things evolve. They don't stay stagnant on a specific ethos. They evolve into something else. You see constantly, and like you're going to have to be flexible on, I don't know, selling something if they don't, it doesn't match with what you expected when you initially got in the position. Like I think that's something that has to be on top of everyone's minds because even in AI, like things evolve and things change. Like crypto
Yeah.
is the same thing. It's going to continue happening.
Yeah. Well, we got the Super Bowl of AI coming up in a couple hours. So I'm excited to try to catch that. And we will definitely do a deep download for you guys tomorrow on everything NVIDIA said. Um, any parting thoughts, Shai, as we enter the trading day? What are you watching closely outside of NVIDIA? Or is that the main focus?
I mean, I'm watching the Qs for sure. They're down just like there's no buying so far this morning. So I'm just watching to see if we break the previous low at 466. I don't think we'll get there today. That would be a major move if we broke that this today. But like if today's catalyst and keynote speech isn't a catalyst, it's gonna get uglier. in my opinion, because I think it's priced in that the Feds aren't going to do it. The Fed's not going to do anything this week. It's going to be a nothing burger, in my opinion. And the relief rally we had the past 2 days, I thought it was a bull trap, and it's looking like it was. So now people cover their shorts. They went long on the upside. Now it's technically breaking again. So now what are you going to do? You're stuck. That's a bull trap. So I think typically it drives more fear in the market. And when a bottom, like an actual true bottom in the market happens, capitulation is required. And that has to be like, there's no end in sight. Things are really breaking bad. Like, I don't know what I'm going to do. Like, there needs to be fear. Like, Yankee trade crisis, August 2024, that was capitulatory. Full, perfect textbook example. This most recent one we had, not even close. VIX was barely broke 30 if it did. VIX, I think, in my opinion, has to hit 40 plus for it to feel capitulatory. August of last year, it was at 60. Same level as COVID when it broke. COVID news. We're not capitulated yet, and just raise capital. Don't like I'm not buying today. Maybe I will for Amazon. Like I'm looking right now, like they're still holding that 190 level. I think it's under 200. It's a very safe allocation, but also like I'm in no urgency. Like everything's just breaking down. Like I have a lot of positions are down 5%. Like things are just head fakey, and be cautious.
Well, put on a sad playlist. Wait for Nvidia. Guys, if you guys are also watching Nvidia, put your takes in StockTwits. We'll go through some of them tomorrow. I know some of you guys have some spicy takes. Funnier comments, the better. But Shay, we will see you on the other side tomorrow and have a lot to talk about then.